It has been a very busy 24 hours in both local and international markets. The Reserve Bank of New Zealand are due to make their announcement on the official cash rate on Thursday morning, while the US Fed has announced overnight that they are on hold. They say that the pace of the US contraction is slowing and there are some positive signs emerging. US stocks also rose, driving the S&P 500 share index toward a 3-month high. This reporting season has surprised everyone, where we have seen most US companies beat their forecasts. Investors are also speculating that bank losses have peaked, although they may still need to inject some more cash to ensure their overall stability. Overall, both European and US markets were well up overnight, 2% across the board. With some renewed confidence in global markets, the New Zealand dollar has been back in favour overnight. Early on Thursday morning, it climbed nearly 2.5% to now sit in the mid-77 range. On Thursday, it is likely to bounce around depending on what the Reserve Bank of New Zealand decides with the official cash rate. ASB is forecasting a drop in the rate by 50 basis points to 2.5%, although we may see two options from the Reserve Bank. It can drop by 25 points or 50 points, and New Zealand financial markets are pricing somewhere in between the two. The result will be that there will be movement in both the currency and also wholesale interest rates on Thursday. An easing in the New Zealand dollar last week helped with wool prices over the same period. However, demand for our wool is still likely to be lower for some time to come. With several major economies in a housing slump, it is unlikely that we will see a quick upswing in building markets. Without some good building activity, demand for our high-quality wool carpets is likely to have diminished. The same goes for our fine wool textiles. Consumers have been easing their discretionary spending across the globe. This may take some time to rebound. While both of these factors are likely to have a negative influence on the market in the short term, medium-term prospects are more positive, given that in time building activity will likely rebound fairly strongly in overseas markets.